going on, everybody? This is saying Lucci here with another episode of Wall Street Porn. Now, I know it's been a while since we've done this, but lately there has been some crazy moves that most people in the Twitter world have convinced me and persuaded me to go ahead and start this series back up again. So we're going to go ahead and get it started with another great trade on Netflix, which went down today. Okay, so down here you'll see a 3-month chart of the action in Netflix. As you can see, the stock has gotten decimated from $300 down to about $107, which it hit today. As you know, the stock has been in the news very frequently, lowering its subscriber forecast, splitting the company off, and calling its streaming business Quickster. There was that whole news debacle with them not securing the Twitter page. The Twitter page ended up being some pot-smoking Elmo guy. So this stock has been in the news quite often, and investors are clearly not happy. Now let's drill down to a 10-day time frame. Okay, now here on the 10-day, you'll see something very interesting. Now remember, this stock has come down from $300 freaking dollars. I mean, so we're looking at like 170 points down. What do you think everybody is thinking down here when he bottoms out at about 130? Everybody and their mothers are taking this thing long. So every single day we have been playing this stock from the long side, or at least I have. You know, just taking small losers here and there. I'll buy the break of like 133, 134, and assuming that, you know, this thing is going to have a short squeeze, and it just never happened. One time he gapped up to about 137 and then just tanked all the way back down. So eventually you kind of figured out that this stock was extremely weak and he might have another push lower. So we kind of got tuned into it yesterday when the stock hit a low of 126.5. This is basically what he couldn't get through, like 126.5, 126. This morning, as you can see, he just shot right through it. So now let's look at the intraday chart. Okay, so now we're looking at the intraday chart. As you can see, pre-market, he didn't really do anything, and right off the open, just absolutely collapsed through 126. So very often when these moves get going and they get started, especially in these high flyer stocks, you don't even have time to get in. So you gotta mark it in, you gotta buy the offer or buy through the offer. And I'm gonna show you what I mean in a second. So what was the option that you wanted to play with? So let's go over here and take a look at this options chain. You know, we scroll through the puts, and you know, when you're looking at weeklies, you want to find something that's kind of out of the money, but not too far out of the money. You know, 110 and 115. Like, yeah, these things paid out very well, but I was figuring 120 is a pretty good area to go for. I mean, assuming a 10-point move or a 15-point move down in Netflix, because he usually can move like that when he breaks down or he breaks up. So we chose the 120. As you can see, the range here is ridiculous. Okay, so up here we can see the chart of that same weekly option, the 120 put. As you can see right off the open, it opened at around 60 cents and shot straight up to $1.20. So you really don't have time to react. You want to get in as soon as your price breaks and as soon as you have conviction in your trade. As soon as we saw the tape this morning, we kind of knew this trade was going to happen. So I went ahead and alerted it out. By the time I sent out the alert, the option was already 120, 130, 140. Stalls out at around $2 and then just trails up all the way to about 12 bucks when Netflix hit the low of the day at around 107. So as you can see, this consolidation here was another good place to buy the stock or buy the option. So let's take a look back down here at the stock. You see it just trailed off at 116. The market even tried to rally, and this stock just stayed down the whole damn time, never got a rally going. So you kind of knew there was a second leg, a third leg in this stock as well. So, you know, this could have been a great hold for the day. And since this is Wall Street Porn and we are fantasizing and you guys all are a bunch of dirty motherfuckers, let's check out how much money you could have made on this. Okay, so let's calculate how much money you could have made had you played the majority of this move. Now my cost was around $1 to $1.10, so we'll stick with that for this example. There was possibility that you could get it cheaper, but again, you had to act really quickly right off the open. So a realistic cost is about $1, and let's assume you're selling it around at around $10. So how much money are we looking at? Okay, so let's move over here to our notepad. Now, assuming we put 30 grand in this, that would come out to about 300 contracts. Now, it was totally conceivable to get your 300 contracts because this option, as you can see down here, traded a total volume of about 8,400 contracts today. So there was a lot of volume going off in the morning, and there was a lot of opportunity for you to sweep that book and build your position. Even if you built it a little bit higher, so maybe it wouldn't have been 100 per contract, maybe 150. Your cost might have been a little bit different, but again, you could easily get this kind of size in this option. So now let's keep going here. So assuming we got it at $1, we're selling those 300 contracts at $10. So we want to multiply by 1,000, because again, with every contract represents 100 shares, so you're always multiplying that by 100. So we have equals 300,000. So now your total profit equals 300K minus 30K, and you're looking at a whopping 270 grand. Again, folks, this is the kind of money I'm talking about. I mean, this is Wall Street porn. This is why we do what we do, and this is sayinglucci.com. Thanks for tuning in. Stay tuned for the next episode of Wall Street Porn.